The US dollar is losing its value due to inflation and potential upcoming hyperinflation. What can we do to protect our purchasing power and even possibly profit during this time? Let's dive into it. What's up guys, it's Kai here. Welcome back to my channel. If you're new here, I make videos on money, finance, and investing because the more we know and better decisions we can make about our finances, the more options and freedom we can have in our lives. So if these type of videos interest you, go ahead and hit the subscribe button down below and the notification bell to stay updated on upcoming videos. In today's video, I'll be going over why the US dollar is currently losing its value due to inflation and why this may be happening faster than it has ever been happening before. And I'll also be going over moves that we can make to protect ourselves against this coming inflation and possibly even profit from it. So if you're ready to get started, please go ahead and hit that like button. It really helps out the channel. It also helps with the YouTube algorithm and helps YouTube share this video so that more people can see and learn from it. Now let's hop into it. So the value of the US dollar has already been dropping for decades due to inflation. Now when I'm talking about the value of the US dollar, I'm talking about its purchasing power. This is commonly known. So we all know that way back in the day, you could have bought food, gas, houses, cars, everything was cheaper way back in the day. And this is due to inflation. So what your dollar can buy today, it has way less purchasing power compared to what it could buy in the past. And inflation is defined as the increase in price of goods and services across the economy. So you may be thinking inflation has been happening forever. What is the big deal? And why should I be concerned? Well, normally inflation is calculated to be about 2% every year, and that's under normal circumstances. But as we all know, last year in 2020, there was extremely abnormal circumstances, specifically the pandemic, the shutting down of the economy, which in turn caused extreme money printing. So if you're living from the US, you may have received a stimulus check this week, which was part of a $1.9 trillion relief bill. And last year, a bunch of these bills was passed when the US government injected $9 trillion into the United States economy. Now this amount of money is huge. And to put that in perspective, that comes out to about 25% of all US currency ever printed from the start of the US currency's creation. So if you have $100, $25 of that was just printed within the past year. Now that's crazy. And the creation of currency equals inflation. With the mass creation of currency, you'd expect inflation to react in kind. We can go ahead and look at this M2 money chart here, which is a measure of the money supply, which includes cash, checking deposits, and easily convertible near money. The M2 chart is closely watched as an indicator of money supply and future inflation. So if we look at the chart here, you can see that there is a steady rise of inflation, which is normal. And once it hits 2020, bam, it skyrockets because the US is printing tons and tons of money and injecting it into the economy. So this is basic supply and demand here. When you can infinitely print as much money as you want, the value of the dollars will decrease in kind because the supply is going up like crazy. So the dollar wouldn't be as valuable as it once was. Now, most people won't see this right away because most people are just aware of consumer good inflations. So maybe your food and gas prices haven't shot up, like the 25% more cash that they just printed out. But there's two types of inflations. There's consumer inflation and then there's asset inflation. You can see that this inflation has been more evident in asset inflation. We can all see that the stock market, real estate, even cryptocurrency and gold have been hitting record highs. So even though that they just printed 25% of the United States cash currency just this past year, they just printed another 1.9 trillion and they're already in talks of passing another $3 trillion stimulus bill. There seems to be a pattern that this will be continuing on at least throughout the remaining of this year. So with all of these increase in asset prices, they'll eventually trickle down sooner or later to consumer prices. But I'm sure you haven't noticed that your pay didn't go up 25% either, leading to the amount of money you earn purchases less now. So what can we do to protect our purchasing power and keep our money buying what it's supposed to be buying? We need to move to where all the big money is moving, which is assets. So I'll be going over 4 assets that you can hop into that will help preserve your purchasing power over the coming inflation. Some will even help you protect against hyperinflation. Let's start off with gold. So people have been running to gold and been using gold as a preservation of wealth for over centuries. So it's safe to say that that might be a good place to go. I made a video on how to buy gold. If you want to check that out, you can go check that out here. I'll put a link to it here. You can check that out after the video, but the upcoming assets I think are better. So another place that you could put your money is in the stock market. Right now, the stock market is currently hitting all-time highs, but to preserve your money, you won't just toss it in anywhere. The stock market is kind of volatile. Some people may say it's in a bubble, but I think that if you put your money into stocks that are essential, such as maybe food or healthcare, that in those stocks, they'll just pass the inflated prices down to the customer, and their stock prices should reflect what the inflation rate is, and at least keep your purchasing power up to par on what the inflation is going to be. So maybe not only essential goods, but maybe even tech companies such as like Facebook or Google, companies that don't have a massive overhead and they don't really rely on selling high-end products to consumers. So these type of companies are just high revenue generating companies. Their business model won't be affected as much by inflation as other business models. Stock market would be a good place to hold your purchasing power, but you got to be sure to choose the right stocks. You got to do your research on that one, because with inflation or hyperinflation, it will start weeding out all the weak companies. Now the next two assets is the ones that I'm more into personally. The first one being real estate. You can preserve your purchasing power by buying real estate, because when you buy a property and a house, you have intrinsic value. You will own your floors, your walls, your ceiling, all the wood and drywall that it took to make that property. On top of that, if you have a good location, like I personally live on an island, so they can't make any more land here. So just the property location has value in itself. Likewise, you could have beachfront property or maybe lake property. But in general, property itself will hold its value and throughout history has kept up its value, at least with inflation. So by investing in real estate, that helps you out threefold. One, the appreciation of the value of your property will keep up with inflation. As we can see in the chart back in the day, if you bought your house back in 2000 worth $120,000, in the year 2010, it'd be worth $220,000. Just the value of your property will be keeping you up with inflation. Two being your debt will be crushed. So inflation not only kills the purchasing power of the dollar, it also destroys your debt, because when you're paying back your mortgage payments or your debt, you'll be paying it back with devalued dollars. And three, you also get to take advantage of tax benefits. And if you have a rental property, that's icing on the cake, because not only will you be able to take advantage of appreciation, devaluing your debt, and tax benefits, along with inflation, rental price inflation increases also. So you'll also be making profit off of a rental property. And currently right now, there is record low interest rates. So if you lock in your interest rates at today's record low interest rates, that's even another bonus, because inflation will surely outgrow the interest rates that you lock in today. Now, if you've been following my channel for a while, you may guess what my last asset would be Bitcoin. So if you look into Bitcoin, it is pretty much anti-inflation. Where we are currently printing unlimited amount of dollars, Bitcoin is capped off at just 21 million coins. There can never be any more. So as the more dollars go up, the value of Bitcoin against the dollar is currently going up. And I'd expect it to continue to do that throughout the foreseeable future, because when there is just a limited amount of goods compared to an infinite amount of goods, it's basic supply and demand, where the price of the limited amount of goods would just continue to go up. And you can see this in limited amount of goods such as classic cars, where no more of those classic cars can be made. But if they're still held in pristine condition, the value only goes up over time. Same thing with artwork, like say like the Mona Lisa or something. There's only one of them, but the value of that is just going crazy. Kind of a similar comparison to where Bitcoin is headed. And also touching back on following the smart money, you can currently see banks now, JP Morgan, Citibank, major banks hopping on this, payment processors, companies, Tesla, MicroStrategy, Visa, MasterCard, PayPal, Square, they're all hopping on this. Are they hedging themselves against inflation? Do they see what's coming up? It seems like it'd be a good idea to follow the smart money. And I think this might be a good play against hyperinflation as well. So if we go back and look at history, hyperinflation has happened a few times back in Germany, Zimbabwe, and Hungary. If you go back and look at them and kind of Monday morning quarterback, like what you could have done to make the situation great for yourself, when the inflation was happening, you would have took your assets and liquidated them and kind of allocated them in something outside of the system to hold your purchasing power. So in those cases in Germany, the way that they got out of their hyperinflation is that they converted back to the gold standard. So if you had converted to gold in the beginning, you would have been way ahead when they converted back to gold afterwards. Similar to what happened in Zimbabwe, their money just started printing like crazy. They had billion-dollar notes as their bills. People were burning their money because it was cheaper to burn their money instead of buying firewood. It came to the point where they weren't even accepting their own money, and they started trading in other people's currencies. So they could have ran to the US dollar as the base currency, which is what is pretty much today. The US dollar is the world currency. Countries use the US dollar as a value to trade against each other. It's the petrodollar. It's used to value the trading of oil. So in all of those situations, all of those countries could have switched their currency to gold, to the US dollar. They could have hopped out of their inflating prices, maintaining their purchasing power. But what happens when the US dollar runs away? Or if hyperinflation happens and you have US dollars, where do you put your money? There's really no place to run, because if you look at the whole world's economy right now, everybody is printing money. So this inflation should be happening everywhere. The only place that it shouldn't be happening would be in Bitcoin, because it has a finite set amount of money. So that could be a place to put it, to hold your purchasing power till maybe all of this blows over. Maybe the dollar crashes. Maybe we go to a new world currency or whatever. But the goal is to keep whatever purchasing power you have now and maintain it. So if you're interested in buying some Bitcoin, I personally use the Gemini app, as they're easy to use and they're compatible with using with Hawaii. So if you're interested in using the Gemini app and getting free $10 with the first $100 deposit, go ahead and check my link in the description down below. All right, guys, thanks for watching the video. I hope you liked the video. Let me know in the comments down below, what do you think? Do you think inflation is coming? Do you think hyperinflation is coming? Is the Fed going to continue to print an unlimited amount of money? I'd love to hear what you think. As always, I appreciate you guys watching, and I'll see you in the next video.